Hi, good morning everybody, and welcome to another of our series of HB 3 and 30. This time it's Tax Compression Part 2. Those of you who enjoyed Tax Compression Part 1, we're going to review what we covered in that presentation, and we're going to talk about how tax compression is going to work going forward. And it'll be very much concentrating on how to set your district's 2020 M&O tax rate. So this is the agenda. We're going to have an introduction to tax rate compression, talk about what reasons the legislature chose to compress school district tax rates. We're going to talk over Tier 1 tax compression for tax year 2020, which is the 2021 school year. I'm going to go over the state compression calculation, the local compression calculation. We're going to talk about how TEA is going to provide technical assistance in calculating the tax rates. Then we're going to briefly go over ongoing Tier 1 tax compression. Then we switch over to Tier 2, and we're going to cover voter approval elections. These are the relevant TEA staff. You can call if you have concerns. Leo Lopez, Associate Commissioner for School Finance. Al McKenzie, Director of Forecasting Fiscal Analysis. Amy Copeland, Director of State Funding. And Sarah Kahn, Assistant Director of Forecasting and Fiscal Analysis. So these are the key points. Don't worry if you don't get them all right now. These are just an introduction to the key points we're going to go over. So HB3 reduced Tier 1 tax rates by 7% from $1 to 93 cents in year 1. And it reduced the Tier 2, the enrichment tax rate, in year 1 also. And it increased meaningful discretion for districts in setting local tax rates by allowing even districts that were at $1.17 will now have a little bit of extra capacity once they are able to raise rates again in tax year 2020. So starting in year 2, which is tax year 2020, school year 21, HB3 automatically lowers Tier 1 tax rates when either the state or local property tax bases grow by more than 2.5% a year. This is help us maintain the balance between state and local share of the FSP. It will reduce recapture going ahead. It does not negatively impact school district budgets, and we're going to cover that shortly. And TEA will be publishing the maximum Tier 1 tax rates for each district in July of each year to make life simple for everybody. So starting off with background information. Just going over some of the terms that we're using in this presentation. TY is our abbreviation for tax year. It applies to both tax rates and property values. FY is fiscal year. As an example, tax year 2019 and fiscal year 2020 both align with the 2019-2020 school year. So if we're talking about tax year 2019 or tax year 2020, you can understand which school year that applies to. Tier 1 is the first tier of the foundation school program, and there is the concept of the maximum compressed tax rate, which is abbreviated to MCR. This is the M&O tax rate necessary to generate 100% of your basic allotment. It's 0.9393 cents is the maximum compressed tax rate in FY 2019 for all districts, and it's going to vary in FY 2020. And then Tier 2, just some terminology, we have the golden pennies, which is up to 8 pennies above the maximum Tier 1 tax rate, above the MCR. And the copper pennies are the pennies above the golden pennies up until you get to the district statutory maximum, which is 17 pennies above the MCR. So just another quick check so that everybody knows how tax years and school years are related. You can see that the 2020 tax year will begin January 1st, 2020, and everybody has up until January 31st, 2021 to pay their taxes. You can see when the notice of appraised value comes into the school districts in April, May of that tax year, then districts adopt their tax rates. This is the November election date if they choose to have a voter approval election. And then taxes get paid at the end of that school year, and they are used for the 2021 school year beginning in September of 2020. So a brief review of how tax rates looked like under prior law. We had a Tier 1, which in most cases was up to $1, but it could vary. Districts may have been lower than that. and then a Tier 2 with a maximum of 17 pennies above the Tier 1 tax rate, 6 of which were golden and 11 of which were copper. So on to HB3. Why tax rate compression? The first thing is that it implemented a couple of the recommendations that came out of the Commission on Public School Finance. The first was to create a long-term systemic balance between state and local share of the FSP. And the second was to significantly reduce the growth rate of property taxes and reliance on recapture as a method of finance. So this chart here illustrates what was happening with the local share of education and recapture. You can see that ever since 2008, after the last round of tax compression, when the local share was at its smallest, it has steadily expanded while the state share has remained relatively constant. And then recapture was really starting to increase greatly. It was running along around $1 billion for quite an extended period of time, for around 2006 through to 2018, but lately it's just been exploding upward, and it was forecast to be almost $5 billion by 2023 if the legislature had not intervened. At the end of the chart there, you can see the orange portion is where recapture would have been estimated to be if the HB3 had not passed, and then the blue part of the bar is post passage of HB3, when we're only anticipating recapture to be $2.3 billion in 2023. So on to how your tax rates are going to be compressed. Year 1, this is a review of the first presentation. The Tier 1 maximum tax rate is reduced by 7% for most districts, down to 93 cents. What used to be the first 2 copper pennies become golden. There's now 8 golden pennies. So for districts which will have a tax rate up to $1.01, they would get 8 golden pennies. Then the 9 copper pennies sit on top of that. 3 of those are not available for most districts in tax year 2019 because they cannot raise their tax rates in that year, and the copper pennies have been compressed. This is now what's going to happen in year 2 of HB3, school year 2021, tax year 2020. The 2.5% compression begins on the Tier 1 tax rate. The TRE threshold is increased by 1 penny so that districts are able to access 5 golden pennies without having a TRE, and TREs are available once again for districts. The maximum that districts will be able to go up to is $1.0863. That would be the compressed tax rate, the maximum MCR of 0.9164 plus 17 enrichment pennies. FY 2020 tax compression. So the first thing to note is that the tax compression is going to increase the Tier 2 taxing capacity. The compression that was provided on the enrichment tax rate in tax year 2019 has expanded the capacity for even districts that were at $1.17 to go out and seek another 3 pennies in tax year 2020. So that is going to increase the Tier 2 taxing capacity for everybody and allow those districts to access another 3 pennies in tax year 2020 when tax ratification elections become available again. So on to how does tax rate compression affect school district funding? Just to make sure that everybody understands that it is not going to affect school district funding. This is the tax rate compression of the Tier 1, and it's because we're just going to review again how FSP funding works. You start out with a formula entitlement based on the number of students and the characteristics of those students that the district is educating. Then we calculate what the district can raise from their local property tax collections. This illustrates what the district would be able to raise at $1. And then the state aid comes in to fill the gap. So what happens when we compress your Tier 1 tax rate and it goes down to 93 cents? The property tax collections are smaller, but it is replaced dollar for dollar by increased state aid. It's so that just making sure that districts once again get up to their entitlement. There's no cost to the district for compressing their Tier 1 tax rate. The state is making up the difference. Onto how it works with a recapture district. Once again, we have the formula entitlement. In this case, the local property tax collections at $1 exceed the formula entitlement, and so the local collections in excess of the entitlement are recaptured. Now what happens when this same school district reduces its tax collections by having its tax rate compressed to 93 cents? You can see that the tax rates and collections are smaller, but the recapture is smaller. Once again, dollar for dollar in the exact amount by which the tax collections were compressed. Now on to 2020 tax rates. Additional tax compression, which will vary by district growth rate, which will start for the 2020-2021 school year. So the first point is there's not going to be any further compression to the enrichment tax rate in tax year 2020. The compression of the copper pennies which occurred in tax year 2019 was linked to the increase in the yield of those pennies, which went up from $31.95 to $49.28. So we're not increasing the copper penny yield again in 2020, and so there will be no further compression to the enrichment tax rate unless there's further increase in the yield of the copper pennies. So only the Tier 1 tax rate is going to be further compressed in tax year 2020. So for tax year 2020, both state and local compression of tax rates will apply to the Tier 1 tax rate. This is different from what happened in 2019. The state and local compression amounts will be calculated in parallel, and then we'll calculate the greater amount of compression from the two calculations, which would yield the lowest tax rate, and we would apply that to become your MCR. So state compression is going to be based on the comptroller's estimates of statewide property value growth that were published in the General Appropriations Act. For the 2020 tax year, we know that they estimated that statewide values are going to grow by 4.01%. And that is the percentage that we'll be using to calculate the state compression for tax year 2020. The percentage for the 2021 and 2022 tax years will be available in January of 2021 prior to the next legislative session. So on to state compression. How is that going to work? The maximum compressed tax rate for a school district for tax year 2020 is going to be the prior year maximum compressed tax rate of 93 cents times a fraction, which is 1.025. This is where your 2.5% compression comes in, divided by the state property value growth percentage of 1.0401. You can see that that comes out to 0.916494, 91.64 cents. TEA truncates tax rates down to 4 decimal places, so it will be 0.9164. This is going to be the actual highest Tier 1 tax rate that any school district will have for the 2021 school year. That's the key takeaway. We already know it, and it's going to be 0.9164. So on to local compression. How is that going to work? Districts which grow faster than the statewide average growth rate will benefit by having their tax rates compressed further to make sure that the district's local tax collections only increase by 2.5% year over year. For local compression, is going to be the prior year compressed tax rate multiplied by 1.025 divided by the local property value growth percentage. So here's an illustration of a district with a local value growth of 10% for tax year 2020. The MCR is going to be 93 cents times the fraction of 1.025 divided by 1.1, which is going to come out to be 86.65 cents. So then we combine these together, state and local compression. The Tier 1 tax rate will be the lesser of the state or local compression amount. The local compression lowers the district's M&O tax rate to keep the overall M&O taxes raised by the district limited to 2.5% a year. Only districts with property value growth faster than the statewide average of 4% will have additional local compression. And local compression only applies to what used to be the first dollar of a school district's M&O tax rate, which has now been compressed down to 93 cents for tax year 2019. So, frequently asked question, how will we know what our maximum Tier 1 tax rate will be for tax year 2020? TEA is going to calculate and make available the maximum Tier 1 tax rate for each district in July of 2020. There is a limit on compression in order to maintain tax rate equity. The limit provides that no district can have an MCR less than 90% of any other district. As we already know what the maximum MCR is for tax year 2020, 91.64 cents, multiply that by 0.9 yields a tax rate of 82.47 cents. Districts which grow by more than 15.6% will have their compression limited. So no district will be able to have a maximum Tier 1 tax rate lower than 82.47 cents. So here's a table of what districts' maximum compressed tax rates will look like depending on their district property value growth percentages. The first group you can see there in the salmon color. You can see that anybody who's growing less than the statewide average is going to have the same amount of tax compression based on the 4.01% property value growth. You can see that they have the 91.64 pennies maximum compressed tax rate. They get a tax rate reduction of 1.3 pennies. Then the group in the middle there, you can see they have property value growth which exceeds the statewide average, and they have varying amounts of tax compression. You can see that by the time you get to a 14% property value growth, they would be compressed all the way down to 83.6 pennies. And then the districts which have even more value growth, they get limited. They're more than that 15.6% value growth limit that we identified in the previous slide, and so they have limited compression and have a tax rate, maximum compressed tax rate of 82.47 cents. And here's another illustration of different types of effects of property value growth. Start out with, you can see that we have an axis with property value growth, and we've identified a 2.5% band there. The first example we're looking at would be a school district with actually declining property values. You can see that the value growth, the blue chart on the left, is actually declining by 5%. The tax rate compression in pennies is still going to be based on the statewide value growth of 4%, so they still get tax compression of 1.3 pennies. And then the collections growth, they will actually see a reduction in property tax collections of 6.4%. Now, the next example is of a district which is rising in value but is below the statewide average, a 3% value growth, which is still below the statewide average of 4%. They get the same number of cents of tax compression, and so of 1.4 cents, and then the collections growth is limited to 1.5%. A rising value district that exceeds the state average, this district has a 10% property value growth. They get 6.3 pennies of tax reduction, and it limits their the local collections growth to 2.5%. And then finally, a very rapidly rising value district which exceeds the 10% tax rate band. They're limited at 10.5 pennies of property tax compression, and their collections go up by 4.6%. So on to TEA technical assistance in calculating your tax rates. How are we going to go about this? We're going to initiate a data collection in the spring of 2020 because we need information from the school districts. We need to receive your estimates of property value that you receive from your county appraisal district. Once we get those estimates, the agency will convert the local values used for state funding, what are known as the T2 values, and then we'll compute the local property value growth rate and the maximum compressed tax rates. We'll calculate your district's compressed tax rates based on the greater of the statewide growth rate or the individual growth rate, and then we're going to publish your MCRs in the summer of 2020. All districts will need to do is decide how much they want their enrichment tax rate to be. Districts' adopted tax rates should be the sum of the Tier 1 MCR and the Tier 2 tax rate. So how does this look going ahead? What's it going to look like after tax year 2020, as HB3 requires additional tax rate compression every year as property values continue to grow. So on the left-hand side there, we have what the MCRs will look like in tax year 2020. As we've discussed, the highest tax rate is going to be 91.64%, and the lowest will be set at 82.47%. If we assume a 5% statewide value growth rate for tax year 2021, then the highest rate would be 89.46%, and the lowest would be 90% of that at 80.51%. For districts which have a cumulative 2-year value growth in excess of 11%, they would be limited at 80.5 pennies. And here's a chart looking at how it might look going ahead through the next 5 years going out to 2024. The orange bar here is the lowest MCR that any district will have for the high growth districts, and the blue bar is the highest MCR that would be based on the state compression rate of 5% growth. You can see that by the time we get out to 2024, the highest MCR should be around 83 pennies and the lowest will be at 75, assuming we get 5% value growth. So now on to Tier 2 and voter approval elections. So a refresher of how it was, we mentioned this in Tax Rates Part 1, tax year 2019. Districts with M&O rates above or equal to 97 cents after compression are largely prohibited from holding a voter approval election. Districts below 97 cents were allowed to increase their M&O tax rate up to 97 cents, which is the Tier 1 tax rate of 93, and the 4 golden pennies that are allowed without a voter election. So in 2020, voter elections are allowed again. But first, let's review what districts will be able to do in 2020 without an election. Districts will still be able to increase their M&O tax rate to the sum of their MCR plus the 4 golden pennies without holding a voter election. Plus, for tax year 2020, districts will be able to access a 5th golden penny without a voter election, but requiring unanimous board approval. This 5th golden penny will be available in every future year, and in fact it is only in tax year 2020 that the unanimous board approval is required. So districts will always be able to access that 5th golden penny without holding a voter approval election. In 2020 and beyond, districts will be able to have a voter approval election to increase their M&O tax rates up to the sum of the district's MCR and 17 pennies of enrichment. So the MCR will continue to decline, as we've seen. Up to 17 pennies of enrichment will float on that top of that MCR, and districts will be able to go up to 17 pennies with a voter approval election. In tax year 2020, the maximum tax rate for any district, except those certain districts authorized by special law to tax above that, will be $1.0864, which is going to be 17 pennies plus the 0.9164. If you have more Tier 1 tax rate compression, and you have a lower MCR than 0.9164, it's going to be lower than that because it will be your district's MCR plus 17 pennies. So, some frequently asked questions that we've received. Can my district choose to adopt a tax rate below the district's MCR? Yes. Districts can choose to adopt tax rates lower than the maximums published by the agency. Districts which adopt lower tax rates will receive prorated basic allotments. The basic allotment will be prorated by the ratio of the adopted tax rate divided by the MCR. So if you adopted an MCR of 85, if you adopted 85 cents and your MCR is 0.9164, your basic allotment would be reduced by the fraction of 85 divided by 9164. What happens if my district adopts a tax rate in excess of the rate authorized by the tax and education codes under HB3? A tax rate that is adopted out of compliance with the law is void. The agency, in calculating funding under the FSP, would reduce state aid or adjust recapture in an amount equal to the amount of revenue generated by a school district's tax effort that was not in compliance with HB3. So districts would not benefit from the additional tax revenue, Furthermore, the district might be liable for other civil remedies for failure to appropriately reduce their tax rates. What if my property values decline? Does my tax rate need to then go back up? The answer is no. Even districts with declining values will still have tax compression. The maximum compressed tax rate of 0.9164 from the state compression would apply even to a district with declining values. So for tax year 2020, no district will need to have a tax rate above 91.64 cents in order to receive the full basic allotment. And going forward, districts with declining values will not have to raise their tax rates. And finally, some additional resources for everybody. There's the TEA funding template that we have provided in the state funding website that will be an illustration of how your tax rates will look going ahead. And we have a special tax rate template that we'll be publishing on the House Bill 3 page. We have a tax year 2019 template, and we'll be adding a tax year 2020 part to that template. So these are the resources. Stay tuned for the most up-to-date information from TEA on implementation of House Bill 3. You can visit the website there, tea.texas.gov/HB3, or if you have questions, please send them to hb3info@tea.texas.gov. And thanks for listening.